But let's go to Larry Shover to find out what he thinks over at Efficient Capital Management. Because, Larry, we're all expecting now that when this communique comes or the media briefing begins, it will probably be void of major numbers. So are we disappointed with that? Is that as expected?
Well, you know what, let's keep in mind, let's not get over our heads. The fact of the matter is we had a late day rally today in the S&P 500. The S&P 500 is priced at 11 times earnings, which is really low. So any kind of news that comes out, any kind of granular detail that comes out is going to cause the market to rally. There is so much that we don't know right now. The EFSF being leveraged, are they going to become a giant CDO fund, or are they going to become the bank? Is Germany going to lose their AAA rating because of this? Are the taxpayers going to have to pay? The bottom line is, right now, there's a little bit of an irrational exuberance in the U.S. I'm not so sure the Australian markets going into tomorrow or today for you are going to enjoy the same rally, but there's so many unknowns still.
We keep hearing from the leaders, stay tuned. You know, we've got this summit, there might be one next week, you know, there'll be the G20. Does that stay tuned message, can we continue to deal with that?
Yeah, you know, the markets seem to embrace this whole notion that we have it figured out, but we're not going to tell you right now. We're going to wait until next week or November 3rd and 4th. And somehow the markets have reacted to that with just a little bit of positive news that, hey, we're going to embrace the whole leverage idea, which I think personally is a bad deal. And somebody's going to have to suffer for this at some point. It will resolve the crisis on a short-term basis, but it's not going to answer the question of long-term payments. And that's the thing that nobody wants to address right now.
So how are you judging this in terms of potential upsides from today, potential downsides?
Yeah, absolutely. The upside actually happened today. They came out with some type of admittance that we're going to leverage the EFSF, sorry. But they didn't give out too much detail, but they gave up enough detail for the market to react positively. What would have happened to turn the market to fall over is if they didn't give detail or if the banks weren't able to give any type of timeline. These things were all spelled out today, and the news is still flowing out of Europe right now as we speak.
And potential downsides? I mean, do you just say it was only upside today?
I think we saw great upside today in the fact that at least they showed some type of political unity in the fact that we're willing to leverage the EFSF. We're not going to tell you how. We're not going to say whether we're going to become a giant bank or a CDO fund. But the fact of the matter is, that's the plan. That's something that's been spelled out and whispered about even a month ago. It makes the most sense to contain the contagion on a short-term basis, and it keeps political people in office because they don't have to make the hard choices. On the other hand, to make things bad, to show downside, they would have had to say the timelines were, we don't know what the timelines were, we don't know if we're going to have leverage. The fact is they spelled out something, some piece of evidence that made the markets rally.
Larry, Michael McCarthy from CMC. We're hearing locally around trading desk and from our European colleagues that we're not going to get a solution here until the market forces one. Can you see that coming through the pipeline? Are the markets going to move in such a way that the political leaders will be forced to act?
Well, right now, the political leaders are probably just like sitting on their laurels, being really happy right now. But at some point, especially between now and November 3rd and November 4th, which isn't too long from now, they're going to have to come up with some detail. And the citizens of Europe are going to have to be OK with this. The fact of the matter is, somebody's going to have to pay. And at the end of the day, it's going to be Germany, the stronger economies. They're going to either suffer a downgrade in their debt rating, or they're going to have taxpayer risk. One or the other, something's going to have to occur. So I think these markets are chopped around so much. In the equity markets, I don't trust them right now. If I could, I would stay away and wait till there's more clarity.
And Larry, is this the beginning of the end of the euro?
I hope not. I think if the euro fails, Europe fails. The fact of the matter is, the best thing that could happen would be to make the countries implement their own austerity programs, or they're out. I mean, I feel bad for Finland and Poland, two countries who have done a lot to maintain their austerity, to get their debt under control, and the countries on the periphery that haven't, I'm sorry, but why should Germany and France have to bail them out? And at the end of the day, I don't think they will.
Larry, you've made great sense of all of that for us today, so that's fantastic because we're just being whipped around at the moment. Maybe some thoughts on copper, because we often check in with you on copper. Like everyone else, it's been following that, will they, won't they, pantomime or drama coming out of Europe. What are you seeing at the moment in the copper price?
Yeah, copper's been a great trade, especially for the trader. It's bounced around so much, but today we rallied above $3.51 a pound, the highest level we've seen since probably the middle or end of September. The fact of the matter is we're in deficit, and right now they're proposing that China is only going to import 6% of what they did last year. Even if that's the case, even if they're wrong on that, we're still going to be in deficit. Keep in mind that the last 5 to 7 years, we have overestimated the supply and underestimated the demand. And these are countries that are still growing. I'm talking about the Egypts, the South Koreas, the South Africas. They need copper. We're in deficit. You see the production's falling out of bed. I wouldn't be worried about copper right now. At $3.51 a pound, it's probably cheap.
Larry, thank you so much. As I said, you've made sense of it. Great to get the copper update as well, because that's something important we do with you every week. We appreciate it. Thanks. Larry Shover from Efficient Capital Management.